What's going on, folks? It's Stock Picks by Tim, and we've got another day in the market. Now, I want to get into a stock that I haven't really talked about in a while, and I have since gotten out of, but now it looks like it's time to get back in. Alright guys, so we're going to be getting into Valens Semiconductor today, and this is going to be VLN. But when you look it up, just make sure you're looking up Valens Semiconductor, because sometimes the Valens company will come up and they are in no way affiliated. So I'm going to leave you guys with a clip in the end here of the earnings call. It was about a week back here. March 2 was the earnings call, but we've got some information there that I think is getting slept on. And then also I'm just going to look over the chart. It's very low volume, but we are near a crucial support level, so watch out for that support level, because if we do break it, we will likely come to some uncharted territory. Now first off, as for some stats on the earnings call, they are a negative 8 cents EPS, so still not profitable yet. They did increase their revenue slightly. Roughly 20 million revenue. Last quarter was, I believe, 19, so that is a slow increase. Currently they have cash of 174 million with no debt. And over the full year 2022, they do expect 83 to 85 million dollars on the year. Now, as for this quarter coming up, they do expect about 20.6 to 21 million. And in my opinion, I think management is under-promising and they plan on over-delivering. But time will tell. Now remember, this company isn't only in the auto industry, but they are also in the medical sector, and both of these industries are going to continue to need more and more chips. Alright guys, now we're going to hit this chart real quick, take a look at it, and then we're going to get into the cut-up earnings call. Now first off, if we break this 540 level, it's very likely we will come down to uncharted territory and test some new lower lows. So keep an eye on that level, but I am okay with averaging in at this point. We're talking about a market cap of $500 million, cash on hand that is close to half of that, no debt, although not profitable yet, but I do think that's set to change in about a year or two, so it will be a bit of a wait, but I plan on buying through at this price because I just see very little risk at this level. Now after this IPO'd, I did buy in, rode it close to the top up to about 8, 9, and 10, didn't get the very top at 11, but the point here is to make some profit, so I'm fine with the profit that I made there, but I do think it's time to get back in. And I can see this coming back to 10 by the end of 2022. That would place this right under $1 billion market cap. Alright, now I'm going to leave you with the earnings, but first off, if you want to listen to the whole thing, you just simply go to Valens and click on the webcast here. I will leave you the link below, so you can just simply click on it. It is about an hour long. I cut it up into about 15 minutes, and at the end, there is one question that I wanted to highlight, and let's get into it.
Revenue and gross margins topped the high end of our guidance. We exited the year with a record backlog and a robust balance sheet that will support our continued growth. In the fourth quarter, we reported record quarterly total revenues of $20.7 million, up 47% compared with Q4 2020. Audio-video revenues increased 40% from Q4 last year. Our automotive revenues increased by more than 140% from Q4 last year, crossing the $2 million quarterly revenue mark for the first time. For the full year 2021, we achieved record revenues of $70.7 million, an increase of 24% from 2020. Audio-video revenues increased to $62.8 million, up 15% from 2020. Our automotive revenues approached $8 million, almost 4 times greater than 2020. Reflecting the first full year of mass production of our VA6000 chipsets and expansion of our product into additional car models. We anticipate the strong demand for our products to continue in 2022 and have taken proactive measures to ensure we will again be able to timely fulfill our customers' needs. As our customers in the audio-video markets already know, Valens is the industry leader for advanced high-speed connectivity solutions. We are well on our way to replicating this success in the much larger and faster growing automotive markets. This leads me to one of our most recent achievements in automotive. In December 2021, we shipped the first in the industry MIPI A-PHY compliant chipset, our VA7000 family, to select customers and partners. This secures our first mover advantage. We shipped engineering samples of our next generation VA7000 chipset family to more than 25 automotive customers and partners. These include 4 leading automotive OEMs and more than 10 tier 1 potential customers who are in the process of evaluating these chipsets for integration into their platforms. Last month, we demonstrated the unique capabilities of our MIPI A-PHY compliant chipset family to hundreds of representatives from leading automotive companies, in the US, Europe, and Asia Pacific. We showed how the VA7000 provides best-in-class bandwidth and distance over a simple, low-cost wiring harness with end-to-end safety. Our high-speed connectivity solutions are uniquely agnostic to the types of sensors, cameras, lidars, or radars being deployed in cars, and will provide automotive OEMs with better and faster connectivity for their ADAS systems. We are already engaged with several sensor and SoC companies such as Mobileye, Sony, and Sunny Optical that plan to embed A-PHY solution within their product offering. We are also working with leading industry players such as Aptiv, Denso, Jasper, LG Innotek, and Sumitomo Electric. In the case of Sumitomo Electric, for example, we are collaborating to match their wiring harness technology with MIPI A-PHY requirements. Sumitomo controls more than 30% market share in wire harness manufacturing and assembly. The VA6000 is the only multi-gigabit connectivity solution available on the market that can work with unshielded wiring in today's cars and support multiple interfaces for infotainment and telematic systems now being required by customers. Our VA6000 chipsets are also a good fit for trucking industry. In late 2020, we engaged with Stoneridge, a leading designer and manufacturer of highly engineered electrical and electronic vehicle systems for the trucking industry. In 2021, we continued to make progress in developing a connectivity solution related to vision systems to address critical safety issues of truck drivers. The solution will also reduce fleet operation costs. We expect initial revenues from the Stoneridge partnership towards the end of 2022 and to increase in 2023 and onwards. In addition to its automotive use cases, the VA7000 chipsets family is well suited for applications in markets served by our audio-video business unit, such as medical machine vision and other industrial applications. We are the market leader in long-reach audio-video connectivity. Our products are used today by most of the leading manufacturers in this industry, such as Crestron, Epson, Extron, Harman, LG Electronics, Logitech, NEC, Panasonic, Samsung, Siemens, Sony, and many more. Our audio-video products power millions of video conferencing applications such as signage, home entertainment, as well as command and control. Second, we continue to see solid demand in both the industrial and medical equipment markets from leading equipment vendors. For example, our extended video technology is deployed in large medical diagnostic equipment such as MRIs and X-ray machines. In industrial, for example, our video extension technology is used in machinery and computer vision system for line inspection. Other audio-video growth areas which accelerated recently include government, due to the growing number of command and control rooms, as they are seeking new ways to convey public safety information. Signage, as institutes, municipalities, federal and state governments increase mandatory public announcements. Finally, while we continue to win new designs with our earlier generation of audio-video solutions, our focus today is on securing design wins and ramping production of our newest generation, the Stello VS3000. It is the first and only solution on the market that supports long-reach transmission of uncompressed 4K 60 as well as HDMI 2.0 and USB 2.0 over a single cable. The Stello is already embedded in designs of more than 100 different products from leading manufacturers. Shipments started in 2021 and we expect to see revenue ramp in 2022. To summarize, Valens had a very strong year in 2021. We successfully became a public company on September 30, achieved robust performance and record revenue. We ended the year on a strong note with record backlog, growing customers' demand, and a strong balance sheet to support our future growth. The technologies we created have matured into industry standards in both markets we address. Our leadership enables us to leverage our first mover advantage, expand our foothold, and secure increasing demand. Valens' success and plans give me great confidence as I look forward to the rest of 2022 and beyond.
Breaking it into our two business segments. Audio-video revenues increased 40.4% to $18.6 million, and the automotive revenue reached $2.2 million, a remarkable 141.2% increase compared to the last year. Q4 2021 gross profit grew to $14.8 million from $10.3 million, an increase of 43.5%. Loss per share for Q4 2021 was 8 cents, 91% lower than Q4 2020, which was 90 cents. Looking at the full year 2021, total revenues increased to a record of $70.7 million, up 24.2% from 2020, exceeding the high end of our guidance. Audio-video revenues reached $62.8 million, up 14.5% from 2020. In 2021, the growth in audio-video revenues was primarily driven by a rebound in multiple regions that had slowly exited the pandemic restrictions, and by notably higher customer demand for hybrid applications that require the unique capabilities that our solutions provide. Automotive revenues were $7.9 million, up 281% compared to 2020, driven by the first full year of mass production of our VA6000 chipsets and the expansion of our solution into additional car models. Despite the very challenging supply environment and the capacity constraints we faced in 2021, we successfully supported our customers' needs and were able to fulfill all the orders received in a timely manner for the full year. We achieved strong bookings in 2021, which translated into a book-to-bill ratio substantially greater than 1, and reported a robust year-end backlog of more than $78 million, supporting our growth projections for 2022. We ended the year with a strong balance sheet with cash equivalents, and short-term deposits of $174.4 million and no debt. For the full year 2022, we expect revenues to be in the range between $83 and $85 million. As we anticipate more automotive revenues in 2022 compared to 2021, at about 20% of our total annual revenues, we expect gross margins to be in the range of 65.5% to 67.2%. The increasing demand in audio-video and the continued expansion of the automotive revenues give us confidence in meeting our 2022 projections.
We have a compelling financial model, strong revenue visibility, and a solid balance sheet that support our investment in our product offering that will further expand our business.
All right, guys, hope you enjoyed so far, and let's get into that question.
Gideon, hi, Dror. Congratulations on the strong finish to 21 and the strong outlook as well. I had a question first on the supply chain. You talked about proactive measures to ensure you can meet your backlog in 22. Can you elaborate on what some of those measures might have been, if any balance sheet capital was used for that, et cetera?
Sure, and thank you, Suji, for the question. So I'd like to start by saying that I'm proud of the fact that we met all our customer commitments and deliveries despite the global supply chain issues during 2021. As we see strong demand for our products continuing this year, as you said, we have taken proactive measures to ensure that we will be able to timely fulfill our customer needs, which means for us that we increase the level of inventory, and you can see it at the balance sheet. We reported an increase of $6.2 million in our inventory level compared to the same balance as of last year. At this point, but I would like to mention a few things. One is that Valens is not exceptional. Basically, we acted like the rest of the industry, and we saw several issues related to the supply chain. The first one is that we saw extended lead times. That, as I mentioned, it required Valens first to increase its inventory, but also it forced us to increase the lead time to our customers. The second thing is that the supply chain vendor we're expecting to see and us to secure capacity by placing long-term binding orders. And again, this again explains the increase in the level of inventory. And finally, it's the fact that, and we mentioned it in the previous session, that we saw some price increases from our supply chain vendors. Later on, I assume that you're going also to ask about what we did with it with our customers, but this increase in the prices also contributed to the increase in our inventory levels.